At the Presidio Bitcoin launch party, we were fortunate enough to have Jack Dorsey here, David Marcus here, Michael Saylor here. So 3 prominent people within Bitcoin with pretty different view or like things that they emphasize around Bitcoin. And I listened to all of them, and I agree with all of them. They're not. They're not. In my view, they're not competing visions.
Right.
They're just they're emphasizing different. I mean, Bitcoin's such a complicated beast. They're just emphasizing different things. Jack emphasizes, freedom tech and freedom money. I would call it like Satoshi's vision, the white paper, the type, peer-to-peer cash.
BSE. Careful with that stuff.
Well, I'm not going to let them steal.
We're taking it back.
Yeah. Taking it back. Yeah. So, and David Marcus emphasizes like using it as money, everyday money. And so Jack definitely does as well. I mean, he coined everyday money within Block, and I think other people are starting using it now. Whereas Saylor, like, that's not what he emphasizes. It's capital, and it's everything you guys just talked about. Right. And also, I mean, I'm saying this because of what you said, David. Yet, I mean, you can love or hate adoption by financial institutions, institutional money, governments, whether it be at the local, state, country level. You can love or hate that. But first of all, I mean, no one should really be against it in principle, because Bitcoin's forever. It's permissionless. It's for everyone. It's for everyone. So now it's certainly reasonable to like monitor the situation and be like, it's becoming an unhealthy balance. And we're gonna talk about it right now on the show about risks to Bitcoin. So that's absolutely worth discussing. And like, okay, but it's less about like, okay, we need to change the code to like prevent a bank from owning it. It's more like, what are the incentive structures, or how do we accelerate using Bitcoin as everyday money? So that there's competition for these different use cases, and we can protect and preserve some of the key properties of Bitcoin that might be lost over time if the dominant narrative and actual usage of Bitcoin is number go up and it just gets sucked into treasury companies and ETFs.
So I want to offer 2 thoughts on this. One is a response to what you said, and then a response to what you said. Again, putting on my investor hat, MSTR, holy shit. Honestly, like tip of the hat to Saylor. I put on my Bitcoiner, or like kind of like hoping this actually promotes human freedom hat. I'm like, we might be in some problems. We might be in for some problems here. Now, if that's the case, my sort of thesis, and I posted a few tweets about this week, is I think we've got 12 to 18 months, 24 max, before all the Bitcoin, or like so much gets siphoned off that we're in serious trouble, to try and find breakout velocity for payments. Now, I love what Block is doing, and we should talk more about using Bitcoin as everyday money. My strong intuition is that it's going to take too long to get people paying, at Square. It's great they're doing it. We should be pushing on every front. My intuition is, if you're going to get breakout velocity before capture happens, and by the way, I'm not even saying Saylor wants this in a bad way, before the inevitable consequence of gravity plays its course, even if he's a totally good actor, which he very well may be, is that you have to find something with the J-curve potential. It needs to be something that could literally just go exponential, which is why we had the Bitcoin AI hackathon, why we were pushing so much on getting Goose in here, why we're talking about payments for agents. And increasingly, I'm of the mindset that we need something with probably AI that could just go vertical. Then you get into the debate about what could that be. I've talked about my ideas from the Edge podcast with Drew. If you haven't listened to that, there's a lot of ideas in there. But the 2 ideas that I came up with the most that can move the needle, somewhat provocative, but somewhat real. One, on the off chance that Andre Karpathy listens to this podcast, you should absolutely, I love XAI, but you should absolutely join Block, work with Jack on Goose, like try and get this thing adopted. Like, this is a chance to save freedom. Like, so that's one move I could see making. The other is Cloudflare. They're in a tremendous position to influence the way the internet goes. If they were to adopt L402 instead of like some centralized thing for the way agents are paying each other, that could be a massive, massive move. But these are just 2 ideas that come to mind. But my point is, I think we have a very limited window to tip the scale, and it can't just be, it needs to be something big.
Let's expand on that. So if, let's say, the next 2 years, Bitcoin payments don't become everyday money, don't explode, which I'd say is the default base case, that, despite we're all working on it, a lot of people are, but that's the base case. What, in 2 years, why is it inevitable then that it won't happen after that point?
Well, I mean, my fear is that enough people will either have like turned over their keys in terms of like they want to just do some kind of in-kind redemption into Strategy or one of these treasury companies because they realize they're going to get better returns that way. And so they're willing to sacrifice that, or enough somehow gets centralized that, well, I mean, one of two things. Either there's the 1984 approach where somehow it becomes harder to hold keys, but like you're given tax benefits or like various, like, I don't know, slaps to hold an ETFs or MicroStrategy instead, or the narrative just gets so far pushed that no one is even thinking about that. Like they're already adopting the centralized versions, which we'll talk about. Maybe that even comes through kind of like, I don't know, the stable coins or like other centralized providers. They get enough adoption while Bitcoin is just getting so heavily sucked into the centralized ecosystem that not enough people are experimenting. To be clear, I'm not saying it's like 100% checkmate, right? Like maybe there is still time, but it just seems like the forces of gravity are Bitcoin gets sucked into more centralized providers. More people get either sticks or carrots to hand over their keys. And at the same time, centralized solutions start getting breakout velocity. And it's like people are doing micropayments with dollars.
So I think to just elaborate on that or expand on that, I don't think it's exactly people who hold their keys. It's people. There's a set of people who have the option to do it.
Yeah.
So there's obviously a segment of people who manage their own private keys. There's a segment of people who hold their coins on exchanges like Coinbase. And if we're looking at percentage of people, number of people, a lot more people hold it on exchanges than self-custody. If we're looking at amount of Bitcoin, then the majority is self-custody still. But number of people, it's exchanges. But at least if you hold it on Coinbase or Cash App or whatever, you can withdraw. You have that option. And it generally works.
Yep.
Well, sometimes people run into hiccups, but
Cash App needs to change a few things about that.
Bitcoin too. I mean, like you are beholden to like policies and like whatever. I think the dangerous part is if your Bitcoin is an IOU and you can't withdraw it. And that's the case right now with ETFs. It's also the case if you buy Strategy or any of these Bitcoin treasury companies. And it ultimately becomes the tax trap.
Yes.
Because the tax trap is like I have, let's say I have $10,000 and I make an investment and I buy BlackRock's ETF or Strategy, doesn't really matter, either one. And then it moons. It goes to $50,000, $100,000. And now I have a huge capital gain. But now I've reached a point in my life, I actually want some Bitcoin to use as everyday money. That like all of a sudden that's become valuable to me. Well, I can't do that with these products, at least today's versions of those products. And I'm hesitant to I can't withdraw. Bless you. So I'm in a tax trap.
Yeah.
Because I have to take this massive haircut to sell it, to turn it into actual Bitcoin that I can use.
Right.
And then it creates significant friction. If I have to pay 30, 40, 50% tax and lose that much of my Bitcoin just to spend it. So I think that's the huge
but this
risk.
is not here today, but this in-kind redemptions, I think it was, you keep reminding me that it was, I think, proposed in January for authorized participants, so like the Jane Streets of the world, for more efficiency, and it's not yet been proposed to make it to retail. But if you had in-kind creates and redemptions to and from retail, wouldn't that avoid the tax trap on ETFs? But
not
MicroStrategy,
but
you're never going to be able to like redeem.
So important things to monitor, and everyone, including big money, needs to advocate for is in-kind redemptions, and not in-kind redemptions just for institutional investors, but in-kind redemptions for everyone. And so if we got that, then that basically addresses that risk with ETFs. But then we're talking about the Bitcoin treasury companies, and millions of Bitcoin being sucked into those. If they don't have an in-kind redemption, then that's the same tax trap risk. And I see it as less clear to me. What's the motive? First of all, what's the motivation for Strategy to offer that? Because they have all these complicated financial engineering mechanisms, and it's very important to them to have maximizing Bitcoin AUM or the number.
I don't think they would ever have.
So I don't see the motivation for they would. So I don't think they would. No. So to me, that is like the pinpointing of the threat that Bitcoin treasury companies, Strategy is the leader there, sucking up all this Bitcoin, no ability for any shareholder to access that Bitcoin. It's a tax trap that creates enough economic friction so that those people never use it.
Hotel California.
It's everyday money.
Yeah, that's correct.
And then, okay, and then another part of this concern is that, you know, anyone who monitors the mempool of Bitcoin, like the Bitcoin network, how active, how many transactions are there trying to be transacted on the Bitcoin network, which is distinct from the price or how many people own Bitcoin or even use Bitcoin. Because if you use Bitcoin and it's purely on a custodial platform and never has to touch the Bitcoin network, well, then there's no activity in the Bitcoin network. So if you monitor the Bitcoin network, and the mempool, for people not familiar with that, is just simply the queue of transactions that have been broadcasted globally that want to get transacted and ultimately mined. That has historically been, well, first of all, the fee markets, the fees you have to pay for a transaction have historically been quite low. Most of the money made by miners is through the Coinbase reward, the subsidy, the minting of new Bitcoin. As we know, that goes to zero. So for Bitcoin to thrive long-term, there has to be a thriving fee market. There needs to be strong demand to broadcast transactions, and enough so that people are competing to get into the next block and pay a lot of money. Otherwise, there'll be no economic incentive for miners, and the entire security model gets destroyed.
Here's a spicy question. I'm just curious, but like, doesn't Lightning kind of limit the need to have transactions through the mempool?
Yeah, yes and no.
No.
So, yes, it's true that like if we open a Lightning channel, you and I can transact infinitely back and forth and never touch the chain again. We only had one on-chain transaction. But on the flip side, anyone who studied Lightning, another criticism is it doesn't scale because it takes up too much block space.
Mm-hmm.
And you constantly rebalance the channels. Like if you need to reopen or close
like
them.
Lightning, as it's currently, the protocol is currently constructed, can't be used by the world. Because if 8 billion people use Lightning channels, there's not enough block space to open those Lightning channels. So it actually would overwhelm demand for block space. So while it does create this efficiency layer, if Bitcoin payments take off, it creates on-chain demand.
But the Lightning, there's a lot of Lightning transactions. My understanding is that from any kind of triangulation you can make on Lightning, it's growing quite well. It's small but growing. And so my understanding is like the mempool and Bitcoin block transactions are not.
I think the explanation is clear there.
Okay.
So it's still tiny, right? So, and it's not enough to dent into I think a reduction in demand for block space is introduction to ETFs. So there's a shift of incoming capital is going to ETFs, which don't hit the chain at all.
Mm-hmm.
And people are doing less like buying on Coinbase, moving those coins to Kraken to like buy some other coins or trade or whatever, or move it to self-custody or whatever. There's less of that. There's more ETF buying. So that reduced demand dramatically. And the Lightning growth pales in comparison to that reduction, despite the growth of Lightning payments. So if that continues to grow at the rate it's growing, absolutely it will increase the demand for block space, and that then great, problem solved. Whether it's Lightning, Arc, Spark, there's all kinds of different technologies that facilitate payments, but it just requires a much bigger payment growth than the tiny market we have.
And to be clear, I mean, I definitely think it is part of it. Right? I agree. ETFs are probably a much bigger part. Like, yes, like short term, it sucks some volume off the chain. But my guess is that a lot of the stuff that's happening in Lightning is net new. Like for example, the Zaps on Nostr, I imagine just would not happen if there was an Lightning network. Yeah. And also like a lot of these guys, like again, they're constantly opening and closing channels and rebalancing things too. So like there's still a decent amount of on-chain activity that exists today that is probably doing that.
Let's take that example though. Like Nostr Zaps, Stacker News Zaps. They don't impact the on-chain like hardly at all, because the predominant amount, the vast majority of his apps are from custodial wallets, and those custodial wallets just have a few Lightning channels. So they've just done a few on-chain transactions, tiny, and yet there can be like millions of zaps.
Right.
So the footprint on-chain is very tiny there. But again, if we see hyper growth of Bitcoin payments on any kind of and as long as those payments are done, there's a sufficient amount of like inter-system payments.
Right.
So it's not just one company's effectively custodial system.
Right.
as long as there's enough interplay there, then we will see a material footprint on chain, and then the Bitcoin network is healthy. There'll be a healthy fee market. It all works out. But the long-term risk here is that so much Bitcoin gets sucked into like strategy and Bitcoin treasury companies. And number one, either Bitcoin's everyday money never takes off, and then the Bitcoin network just has no activity. And we'll get to a point. I mean, there's already people calling for like creating tail emission. Like there's a concern that like miners aren't going to have an incentive to mine once the minting of Bitcoin trends towards zero. Even at the Quantum Bitcoin event, there was one person saying that in 8 years, if we don't see growth of Bitcoin payments or something that creates sustainable demand for the network, that we're going to have to introduce tail emission. I think it's more of a 15 to 20 year time frame where it starts to get concerning, not 8 years. But either way, that narrative will only grow louder.
So you're saying the degens are our only hope?
Well, I don't know if it's sustainable mempool or Blockspace demand. So the concern is that whether it's 8 years or 15 or 20 years, that the voices will grow louder, saying like, "Hey, miners aren't making much money." An entire premise of Bitcoin is that the security model, we need an incentive, economic incentive for miners, and everyone's like, "Well, the fee market ain't happening. Everyday money ain't happening. So how do we address this?" Well, we change Bitcoin to introduce continuing a tail emission, continuing to pay a subsidy to miners, which would of course change the supply cap of 21 million.
That's
now there's an alternative that was discussed at the Quantum Bitcoin event, which is like, well, there's all these like presumed lost coins, or these coins that ultimately don't make the transition to post-quantum Bitcoin. So we'll take all those, burn them. I mean, definitely one of the key questions of how to deal with quantum, if we need to deal with quantum, is do we burn these coins that will be stolen by a quantum computer? If we do burn them, one proposal is to take them and recycle them into an incentive program for miners. So that would be a source of tail emission. And the beauty of that is that we're not touching the 21 million.
Right.
But at best, I think that can be argued. I mean, first of all, you can get into the philosophical arguments of burning the coins, but if we just set that aside, assuming everyone's decided we're going to burn the coins, we burn the coins. Now, what do we do to them? Literally keep them burned or recycle? A nice thing about that is that, like, okay, great. We aren't touching the 21 million narrative, but it's a stopgap. It's a Band-Aid, right? Because once all that's issued out, then we reach a point again. If there's not Bitcoin network activity, there's not fees. Okay, now we need to expand the 21 million. So it would hurt if that were ever introduced. It would, in my opinion, substantially hurt the credibility of any kind of statement saying like,
yes,
in 50 years, there'll still be the same monetary policy as today.
It becomes Ethereum.
Like,
I think it kills
to
it.
me, one of the,
you can't compromise
a top
neutrality.
three. You can argue it's number one, but a top three tenet of Bitcoin is the monetary policy that was set forth on day one is the same as today.
Yeah.
And I can credibly believe that in 50 years it'll be the same.
Right.
There's a strong, I mean, we're talking about risks to this, right? But we still believe there's a high probability it's going to be the same in 50 years. But it's really important but that's not a guarantee, right? It's not a certainty. Right. It's really important for us to talk about and reason about how could that not be the case. So I think a huge risk is we don't see sufficient Bitcoin network activity. We don't see sufficient fees from transactions. As the subsidy declines towards zero, growing louder voices that will be appealing to people will be to change the monetary policy of Bitcoin. And I don't think we want to reach that future, because then if we get to that point too, then investors will be like, what did I invest in again? I thought the only reason I invested is that doesn't change.
Right.
Yeah. I said this kind of jokingly, but I actually kind of want to double down on this right now, which is that the irony is the most hardcore Bitcoin is money people really probably need the degens, at least short term. I hope we find one of these AI breakout cases. But the reality is Bitcoin got started as gray to dark market money. And if you really want it to survive no matter what, I'm not saying necessarily dark, but like it should be at least, in gray areas. That's where Bitcoin thrives. We were talking about last night, like when do you stablecoin?
Maybe I didn't interpret your degen. I thought you meant like ordinals and runes.
I do. I mean that, but to me,
there's that, and there's also like dark markets as well.
So I'm talking more about the runes and the gray, let's say gray area. But like what I'm saying is like for the people that are like, oh no, it's money and this and that. It's like, dude, the gamblers are the ones who are operating in this like liminal space between what is and is not allowed. And like the gamblers and like the guys living on the riverboat, those are the ones that keep Bitcoin what it is. Without the riverboat people, I mean, your point that it gets captured and then loses all of its value, like that's a real risk.
Yeah.
Well, my optimism, and I know we're kind of running over time now, so we'll draw to a close, but my optimism is that I think there are 1 billion people who are newly enabled to build things.
Yes.
And they didn't know how to build things before, but they had ideas. Now they're able to build things, and there needs to be money transactions when people build things, because running these models, there's a cost to, and keeping these things alive, and then the value you create and the things that you build get paid by other people. And so instead of saying like, let's evolve the existing world to use Bitcoin mostly, I think it's great that people do that, but I think the growth and my optimism for the growth and kind of hitting these J curves and kind of these exponentials is that things that could never be built or were not like all of the ideas and the creativity of humanity has not been applied to building the ways that Bitcoin could and would be used. And now we've unlocked that.
Yeah.
That's possible. So like the next, is it 18 months? Is it 24 months? When you have 1 billion people building applications, some of them are going to figure out interesting things to do with Bitcoin.
Which is why I come back. I agree with you, and I love that optimism. You and Ben are making me feel a lot better. You made me feel a little bit more scared, but I'm just kidding. But I mean, I said this jokingly, but I actually mean it. That's why we need something big like Carpathy to come work on and increasingly getting like the Goose people working with the Bitcoin people. Like I think that's probably our number one shot at not having this like dystopian future.
Yeah, and I agree. Net, I'm optimistic. I'd probably just quit and work on something else if I thought it was all going to fail, right? So I agree with that point, David. And we just need to like triple down on it.
Make it happen. Will that shit
but we actually have even more risks to talk about. So we'll tackle that either next week or in a future PBJ episode. It's super important for us to think honest. Through all the risks, be critical analysis, be honest. So that, both the like, communicate and educate people, hear from people, where are we wrong in our analysis, but then also like come up with solutions, right? Which we're already doing, but like improve how we're working to solve these.
One other thought, just while we're on that subject, you've said this many times, and maybe you're even the guy to spearhead this because you're so deep in there. I also agree with you in addition to just like vibe coding and stuff. Increasingly, I think it's going to be something with games that like probably young people are embracing. Yesterday, without doxing anyone, there was a very sharp young guy who told me he's been to Bitcoin for like 15 years. I'm like, but that would make you like 12. He was like, that's right. And I was like, well, how did you even get started? And the sort of like implication was he'd like steal his dad's passport to get started, right? Mm-hmm. So like, I do think the like Skibbity Cash that Block was working on and like all this stuff to get like young people, because young people are also unbanked, right? And like, I mean, I'm becoming a Skibbity maximalist here. Like, I actually think our best shot is.
Just to be clear, I don't think Block
worked
on Skibbity.
Oh, that was.
I think a Block employee may have contributed personally, but
a Spiral grantee and a Spiral employee worked on the project.
Fair enough. Yeah. Regardless, whoever did it is a legend, and I actually think that's our best shot. Is like if we get the kids gaming with this stuff, and remember, kids are unbanked. Like this guy's having to steal his dad's passport to participate. Great, there's a market. Like.
Yeah, I mean, there's so much energy. You look at Roblox. Like, if you're a 12-year-old kid, you have no way to earn money. So these 12-year-old kids
and they're smart. These
build
kids are smart.
Game on Roblox and make money doing that. Like, that's actually a credible way. Better than a paper route.
And they could probably do a lot better than their parents in the new economy. So
yeah.